To understand why these new ETFs matter, it's important to understand the environment they're launching into. The ETF market in 2024 and 2025 has become hyper-competitive. Investors are no longer satisfied with simple index exposure. They want yield, they want themes, they want income, and they want strategies that can perform even when markets become choppy. That's the gap GraniteShares has been filling with its YieldBOOST series. ETFs designed to sell put options on leveraged ETFs, collect option premiums, and distribute that income, often weekly, to shareholders. With SEMI targeting semiconductors and NUGY targeting gold miners, investors now have access to options-powered income in two of the most watched, most volatile, and most opportunity-rich sectors of the market. Let's start with SEMI, the GraniteShares YieldBOOST Semiconductor ETF. The semiconductor industry has been one of the most explosive growth stories of the decade. Everything we use, AI models, cloud computing, autonomous vehicles, VR systems, consumer electronics, data centers, runs on chips. Companies like NVIDIA, AMD, Broadcom, ASML, Micron, and TSMC have been driving the market forward with innovations in GPU architecture, next-gen memory, chip fabrication, and high-bandwidth processing. But this growth has also brought volatility. Semiconductors move fast, and leveraged semiconductor ETFs move even faster. SEMY uses that volatility to its advantage by selling put options on a leveraged semiconductor ETF, typically something like a 2x leveraged SOX or semiconductor index product. The beauty of this approach is that SEMI doesn't need to hold semiconductor companies directly. Instead, the income comes from option premiums, which rise when volatility rises. And in a sector known for 3 to 5% daily swings, that volatility is almost always present. So SEMI appeals to two types of investors: those who want exposure to the semiconductor trend, and those who want a way to earn income from the sector's high volatility without taking full direction risk on individual chip makers. In a world where AI infrastructure spending keeps accelerating and chip demand keeps outpacing supply, SEMI is effectively trying to monetize that demand through an option-selling lens. Now let's shift to NUGY, the GraniteShares YieldBOOST Gold Miners ETF. This one targets a completely different part of the market: gold miners, commodities, and the macro hedge landscape. Gold has always been treated as a defensive asset, something investors look to when inflation rises, when central bank policy becomes uncertain, or when geopolitical risk spikes. But gold miners are a different animal. Their equities tied to commodity price fluctuations, cost structures, global production, and investor sentiment around inflation and currency risk. NUGY doesn't hold gold miners directly, just like SEMI doesn't hold chip stocks. Instead, NUGY sells put options on a leveraged gold miners ETF, usually one tied to the NYSE ARCA Gold Miners Index. Leveraged miner ETFs are extremely sensitive to swings in gold prices. A 1% move in gold can translate to a 3% move in leveraged miner ETFs. For an option-selling strategy, that volatility translates into elevated premium income potential. By collecting premiums on these put options, NUGY seeks to turn macro uncertainty, something that normally creates fear, into an income opportunity for investors. What makes these two ETFs so interesting is how they allow investors to earn income from the volatility of completely different market drivers. For semiconductors, the volatility comes from innovation cycles, AI demand, earnings surprises, and global chip supply chains. For gold miners, the volatility comes from inflation expectations, real interest rates, currency movements, and geopolitical uncertainty. GraniteShares is essentially saying, why let volatility go to waste? Why not harness it and convert it into a systematic income engine? Both SEMI and NUGY follow the same underlying YieldBOOST philosophy. They apply a rules-based approach to selling put options on leveraged ETFs. They collect premiums, then distribute that income, often weekly. They're also structured to provide natural downside cushioning, because the premiums collected help offset price declines. Now, that doesn't mean these ETFs are risk-free. It's important for investors to understand that selling puts on leveraged ETFs carries real exposure if markets fall sharply. Leveraged ETFs amplify moves, so a sudden sector correction can translate into steep losses. But this is why the YieldBOOST suite appeals to a specific kind of investor, someone who understands volatility, wants income, and prefers a strategy where risk is defined and systematic rather than speculative and unpredictable. The bigger picture here is that GraniteShares isn't launching these ETFs in isolation. Earlier this month, they introduced the GraniteShares YieldBOOST MARA ETF, which targets volatility in Marathon Digital, and the GraniteShares YieldBOOST GenQ ETF, which focuses on the quantum computing space through IONQ. These launches show a clear pattern. GraniteShares wants to dominate the options-powered income category across multiple high-volatility themes: crypto miners, quantum computing, semiconductors, gold miners, and more. Each fund taps into a niche where volatility is structurally high, which means premium income potential is structurally high as well. This strategy reflects where investor demand is heading. Traditional yield, like bonds, dividend stocks, and REITs, has become inconsistent in a world where interest rates keep shifting and macro cycles remain unpredictable. Investors want income that doesn't depend on corporate earnings, dividend policies, or interest rates. They want income that comes from market structure itself, specifically from volatility. That's exactly what the YieldBOOST lineup is built for. GraniteShares is effectively building an ecosystem of income ETFs that convert thematic volatility into yield. For semiconductor investors, chip volatility becomes income. For gold investors, commodity volatility becomes income. For crypto enthusiasts, miner volatility becomes income. For quantum computing believers, early-stage tech volatility becomes income. And instead of chasing the underlying stocks, these ETFs sit one level above, monetizing the sector through its leveraged derivatives. With the launch of SEMY and NUGY, GraniteShares is signaling that options-powered income isn't just a trend. It's becoming a permanent category in the ETF world. As more investors seek alternatives to traditional income and more volatility emerges across different sectors, strategies like these are likely to gain even more traction. If you're an investor who wants exposure to fast-moving sectors while collecting systematic income, these new launches may be worth exploring. And whether you're bullish on semiconductors, hedging with gold miners, or simply looking for income strategies built on volatility rather than yield-starved bonds, GraniteShares is positioning itself as one of the most innovative players in the ETF market today.